Mobile home parks are the most affordable housing solution in the country. So that's a huge long-term trend that we get behind as far as the lack of affordable housing. So supply demand econ 101, you have a very limited or declining supply of mobile home parks and a growing demand. So long-term, should be doing quite well in mobile homes. We continue to do well in that space. Very hard to build a new mobile home park in a desirable area that is actually affordable due to zoning restrictions. A lot of cities, municipalities would rather a developer build something that can produce a lot more tax revenue and income for the city. And so you're just not allowed to build them in most places anymore.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest is a capital manager based in Oregon who focuses on recession-resilient investments. Please welcome Mark Khuri. Mark, welcome to the show.
Thank you, Dylan, for having me. Good to be here.
I always like to start off at the top, Mark, by asking folks how they got into the real estate space.
How I got in? Sure. I was sitting in my cubicle, working at W-2. I was in finance for a number of years, and a coworker sitting in his cubicle next to me pulled up a spreadsheet. He said, "Hey, come check this out." And so we love spreadsheets. So I'm looking at this spreadsheet. I said, "What is this for?" Right? And he was looking at something outside of what we should have been doing, just to be transparent, right? And so he had a pro forma projection that he put up for I think it was a 4-unit property in Southern California, showing how much money he was going to make. And it was unbelievable to me. I mean, I think it was probably unrealistic too, just to be transparent. But
Right.
I was looking at the first kind of real built out, well-built spreadsheet of how much profit and cash flow he was going to make on an acquisition down the street from our office. And so that was a very quick memory of one of the first times I dove into underwriting and looking at projections.
Do you remember what type of deal that was? Was it office complex? What was he looking at?
It was a 4-plex multifamily that needed some renovations and re-tenanting and some heavy lifting. But yeah, it was apartments.
Walk me through, Mark, getting into the real estate space, coming from a finance background. Was it a very much, diving headfirst into it? Hey, how do I make a new career out of this? Or was it a slow drip, progressive, easing your way into the real estate space?
Yeah, it was a little more slow for me. I worked in corporate America for about 8 years before going full-time into real estate. But I started investing on the side 3-4 years into my W-2 job, bought a condo and moved into it, house hacked a bit. And then I took some money out of it and bought a 4-plex with my brother. We partnered up. Then my parents and I and my brothers all partnered up, putting our own capital in. We were starting to buy stuff distressed on the courthouse steps. This is 18 years ago now.
Yeah.
So a lot of short sales, REOs, foreclosures, all bank owned stuff. And so by 2010, we had built up a small portfolio of just family money. And myself and my father were operating it and really doing all of the GP work, if you will. And I was hooked. So I left the W-2 and went full time into real estate, just using that experience from myself and my father as well, who's been an investor since the 70s.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Finally, someone on the show who dove in and invested during the crash. I've done 150 of these episodes, and I have so many people who were on the sidelines or they were a mortgage broker and it wiped them out or they had to pivot. You mentioned family being involved since the 70s. So when they saw this happening and when you saw this happening, was it kind of like okay, we've got to be active now because this is really like a black swan event that's happening?
I wish it was that clear to us, to be honest with you, Dylan. It was not. There was definitely a lot of fear, uncertainty, hesitation. At the end of the day, we made some smart buys during that time frame that were just stressed in nature. Um, but the key to our success, I think, is we just never sold anything at the wrong time. And so I was buying in 2005, right, which was pretty much the run up to the peak of '06, '07. But we were also buying in '08, '09, and 2010. And so I didn't sell that 2005 property till 10 years later. And at that point, the market had bounced back. And so that was a big part of learning is don't get yourself in a position where you have to sell at the wrong time. That's how you can lose money in real estate.
I mean, at this point, and we're talking 2008, 2009, 2010, there's, I'd say, more interest in private equity and in people who are coming in because it's so hard to get any type of financing and lending at this point. When people are seeing your projects going well, and you're talking about, doing projects with your family, I believe you mentioned, was it a duplex with the brother or a quadplex?
Yep, exactly.
Are people coming up to you and saying, Mark, hey, how do I get involved in this? Or is that later down the line?
A little bit, yeah. But again, my main job was a W-2, was in finance. And my father is a surgeon by trade. And so they saw what we were doing on the side. And that's essentially how we expanded capital raising in 2010, Dylan. We just went out to some friends and colleagues and shared with them more on what we were doing and how I pivoted outside of my W-2 career and started our company. And that's how we first started raising capital. So yeah, very much just sharing our process, our portfolio and the strategy and also the why now. And now, again, it was a very scary time for people. And
Yeah.
so even those that were interested were quite hesitant, to say the least. And it was a really hard time to raise capital nonetheless.
I want to ask you about being a capital raiser, being a fund manager, but also a capital raiser. I think a lot of people who are in the real estate space have exposure to this, but people on the outside may think, well, I've got to have extensive finance background in order to raise any type of capital. I've heard all different perspectives. I've had people on this podcast who've come from Wall Street, and then I've had people who were farmers and were doing farm to table type of commerce that way. And then they ended up selling a business, raising capital in a separate realm and realizing, hey, I can do this. So I'm curious to get your perspective and also, how you got experience in raising capital. What were maybe some of the obstacles along the way as well for you?
Yeah, look, I'll say one thing. Raising capital is one step in the process, right? It is obviously essential in order for investments. You have to have the capital. But really underwriting, analysis, due diligence, vetting, very critical, very critical. And so when you're asking the question about raising capital, you see people from all different walks of life and backgrounds that can raise capital. Um, but really experience, track record, financial acumen are probably more important in order to avoid all the pitfalls in this business and the deals that are very aggressively underwritten versus those that are conservatively underwritten, and operating partners that, may not be a good fit versus those that are. That to me is where I spend most of my time, Dylan, not quite as much on raising capital. I'm more of a deal junkie, if you will, and analysis and underwriting and trying to find, every day we look at 2 to 3 deals and opportunities out there. We invest in 5 to 8 a year.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So, what is that? 99% of the opportunities out there we pass on because they have too much risk, then we're not comfortable with. And we just don't think that most of those deals have a high likelihood of meeting or beating the projected returns. That's the
I want
goal
to
of all this, right? And so if you can't come away from analysis saying, hey, I think this one's really going to meet or beat the projected returns, and you don't know how to get to that conclusion, you need to ask for help or be working with a team that does know how to do that.
I want to pivot a bit and ask you about recession-resilient asset classes. I am a Texas licensed realtor. There's some that asset classes that I really love personally. I'm not sure how recession-resilient they are. I think this idea of having a recession-resilient investment is, of course, going to be attractive to a lot of people. So, which assets do you like to invest in? And for folks who may not be investing with you directly, would you recommend folks take a look at for that kind of recession-proof investment?
Yeah, there's a few that come off the top of our head that we invest in regularly. The first one is mobile home parks. We also invest in triple net industrial sale leaseback properties. And that's a mouthful. If you don't know what that is, that's very niche, but we could explain more. But we also invest in some multifamily, not all. Many of it is still, I would say, doesn't pencil very well and not that interesting, but some of it is. We also invest in self-storage
Yeah.
and private real estate debt funds. And so all of those are, I say, our main focus for recession resistance.
I want to get a little bit granular on self-storage and mobile home parks. Maybe give away some of the gold, but not all of the gold here, Mark, because this has been very hot. I can say, as a Texas realtor, uh, people, of course, have lots of land, and you're also dealing with mobile home park owners who themselves may be looking to retire or get out of the business. And so a lot of the mobile home parks that I've seen are older, but you've also got an increased demand or maybe a way to revitalize the space. And then mobile home parks are different from RV parks, but then it's a similar type of space. And I've seen all different types of ways where people are getting into the RV park space. Self-storage as well. I mean, you can take out SBA loans on self-storage. So I'm curious to get your take on these kind of land plays and what really sets them apart.
Yeah, I mean, we've been investing in both mobile home parks and self-storage for about 12, 13 years now. Dylan, mobile home parks are the most affordable housing solution in the country. So that's a huge long-term trend that we get behind as far as the lack of affordable housing. So supply demand econ 101, you have a very limited or declining supply of mobile home parks and a growing demand. So long-term, should be doing quite well in mobile homes. We continue to do well in that space. Very hard to build a new mobile home park in a desirable area that is actually affordable due to zoning restrictions. A lot of cities, municipalities would rather a developer build something that can produce a lot more tax revenue and income for the city. And so you're just not allowed to build them in most places anymore.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And so that's a moat around the asset class from a supply standpoint, which is great. Very hard to find in real estate.
Yeah.
Not the same case with self-storage. Self-storage is very easy to build, generally speaking. It's the lowest cost, one of the lowest cost types of construction you can build due to how simple it is, right? Walls and a roof and no plumbing and sometimes electricity, right? But no gas,
Right.
etc. They go up fast, they go up cheap, and they compete with the old stuff. So you have to be very careful in self-storage with new supply. It can greatly affect the performance of existing assets, but similarly to mobile home parks, you tend to see a long-term sustainable demand in that sector. And if you hold long enough, you'll probably do quite well. And so those are some quick snippets on both asset classes. Happy to share more if it's helpful.
I want to ask you about folks who may be uh, apprehensive about real estate in general versus some other investments that they can put in, namely Wall Street, right? I think a lot of folks may want something tangible, but they also are worried, well, what happens if there's a crash? How long do I really need to hold on to this for? I don't know anything about managing a storage facility. How do I get involved? And I would kind of say to them, well, then you got to go to Mark Khuri because he'll manage it for you. But what's your advice to those folks who may be a little apprehensive about getting involved in real estate, knowing that, it's uncertain and it's illiquid?
Yeah, so you nailed it, right? The lack of liquidity is what differentiates it predominantly from other traditional investments like public equity stocks, etc. So you have to be ready to hold, 3, 5, 7, 10 years, depending on the business plan. At the same time, there's some differentiating factors that we love and prefer. One of them is you can really analyze down to the dirt that the property's on and get a very good understanding of the supply, the demand, some of the market trends that might be in your favor in that specific location. And then, of course, you can earn passive income from it. And that's something we focus on. We're looking for investments that are already built and stabilized. We don't do new construction. We like to have year one income. 3, 4, 5, 6% is quite common for all of our deals for year one income. And then we want that to grow, right? We're looking for, low to mid to high teens range of average annual ROI while forcing appreciation. That's the other part. You can improve the
Right.
properties. They're essentially businesses. You can grow the value. And there's lots of ways to do that. That's the type of investments we like to focus on. And so I think, although there's a liquidity premium that you have to be looking for because you don't have liquidity, there's a counter to that. You have hopefully a better return, and you also get a lot of tax advantages, bonus depreciation, passive losses. And of course, if you want to be active, like you mentioned, managing the property, the tenants, the toilets, great, you can do that. Or if you want to be passive and invest in more of a fund style investment, those are available as well. So it allows people to get into real estate under their own kind of conditions and comfort levels while still reaping all the benefits.
We are coming up on time here, Mark. Where can folks go if maybe they have a deal that they'd like your feedback on, or if they'd like to reach out to you, make contact with you?
Sure. Yeah. I mean, again, our company name is SMK Capital Management. Our website is smkcap.com. And for folks who are looking to learn more about some of the passive investments we're doing, we have a ton of information on our website under the Learn section as to investment examples, types. People can reach out and connect. share opportunities, look at the ones we have, see if there's a good fit.
Mark, thank you so much for coming on the show here today.
Yeah, my pleasure. Thank you, Dylan.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.